Now interest rates are starting to rise. It is still not too late to take advantage of these low rates. You can save a lot of money in the long run by refinancing your mortgages at today's current low interest rates. What's up everyone? My name is Joris. Welcome back to my finance channel. Interest rates are going up again, once again reaching the average levels of the last few years, and they are leaving the extremely low rates behind. But this doesn't mean that it's the end of free money. As long as your mortgage rate stays under the current inflation levels, you can lend money for your property, you can lock your monthly mortgage payments, and you can pay off less and less in value over time. Basically, because of inflation, you are paying off less every year, and this is how the free money comes into play over the long term. Even if you're not looking for a new property at the moment, you can still do this with your current mortgages, though it will be a little bit harder, but still it's possible. And we will dive into it right after you hit the like button for this video down there. In Belgium, the maximum time a mortgage is active on a single property is 30 years, and after that you will have to pay to reopen or to open a second mortgage period, which is often not worth it. But since most outstanding loans are handed out on 20 or 25 years, there is still a lot of room to lengthen your mortgage. So let's say you have paid off 5 years of your current property, a mortgage loan of 25 years. You can now lengthen the duration to the maximum and change the outstanding capital on 20 years to a loan of 25 years. So you're spreading your outstanding payments over those extra 5 years. This is very interesting if you still have a high interest rate on your mortgage loan, since switching to today's lowest interest rates will make sure that your added interest costs over the added years of the loan will be covered. A quick example, a 250,000 euros property bought 5 years ago with a mortgage loan of 25 years at an interest rate of 2.5% gives you a monthly payment of 1,120 euros. If you manage to lower your interest rate to 1.5% now, you are paying down around 1,000 euros per month. And that's already 120 euros lower every month. The trick is, your own bank won't hand you this lower rate easily. You have to ask other banks to get the low rates and then represent them to your current bank. Important to note here is that the maximum mortgage time is 30 years. But if you refinance at another bank, they have to reopen a new mortgage period of 30 years, which will obviously cost you more. So if you refinance at another bank, you will have to take those costs into account. That's why it's always interesting to get a quote from another bank and then representing it to your own bank to stay within that first mortgage. So you don't have to pay the closing costs and then the reopening costs of the mortgages. You can even take this further. If you want, you can lower your monthly payments even further by spreading them more over time. As I said before, the maximum length of a mortgage is 30 years. So if we take the same example as above, the property of 250,000 euros paid off for 5 years, now refinanced on 25 years again, on the maximum duration and with better interest rates of 1.5% now. The outstanding capital after 5 years of your initial loan is 211,530 euros. If you refinance this amount for 1.5% over 25 years, your monthly payments will be 845 euros. That's already a big difference coming down from 1,120. But on the other hand, you are paying down your mortgage for 5 years longer. It is a matter of preference. Now, why would you want to do this in the first place? You are basically paying down your mortgage 5 years longer. So that's 5 more years in debt. Well, there are pros and there are cons, and there are a few reasons why this can be interesting. First off, the lower monthly interest. If you decide to refinance your loans but not lengthen your mortgage, you are effectively winning the difference between your original payments and your new payments, so the 120 euros we were talking about earlier. Secondly, when lengthening your mortgage, you are lowering your monthly expenses, meaning you'll have more financial margin to save and invest every month. In most cases, your investments will have a better return than your property, and even with the mortgage payments, it's still more rewarding to invest than to pay off your mortgages. And you're also, of course, spreading your risk between asset classes. In the case of an investment property, lengthening the mortgage might be the difference between a negative and a positive cash flow. For investment properties, positive cash flows are preferred, obviously, so you don't have to put in any of your own money to keep the investment growing. So basically, it's a standalone unit in your overall investment portfolio. You don't have to worry about a thing. But not everyone wants to have loans outstanding. It's a big responsibility after all. But using these loans in a smart way will provide a financial leverage in wealth building. Soon I will switch around my mortgages and I will keep you updated on the process when time comes. If you're interested in the actual process of what I'm about to do, you should start by liking the video for the YouTube algorithm and subscribe to the channel. Also hit the notification bell because then you will be alerted when that video comes out. I thank you very much for watching and I will see you in the next one.